De você, moça flor, te lembrei de você, moça flor, te lembrei de você, moça flor. 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 Te lembrei de você, moça flor.
Welcome, welcome, welcome. We are back. Lindsey, Glenn, Frank, the Tank, Plebere, Corey, Silent in the chat. What's up? I understand. Maybe some of you don't want to even watch the stream right now. I'm sure many people are just not going to watch the stream right now. It sucks. A lot of markets suck right now. It's just not a fun time for a lot of people unless you're just shorting everything. It's tough out there. Blood in the streets. That's the title of the stream. That's really what it is. We're witnessing Bitcoin crashing after it's already been declining pretty much this whole entire year. It's continuing. Stocks heading lower across the board. These are the bad times. I just try to remind myself of that. And it can get worse than this. That is possible. But it's going to get a lot better than this at some point. I don't know how long, but it will. It's just a question of, are you strong enough as a trader to make it through these times or not? Some people just aren't. Some people, the 14 of you here right now, the people in the chat right now, you are able to. So thank you for believing in yourself, for believing in me. But we're going to get to everything. We're going to look at all the charts. It is hectic right now. Let's get started with crypto. Then I'll talk about other markets. I'll talk about the stock market. It's not easy streaming when things are like this. I'm not going to lie, because it hurts me just as much as I'm sure it hurts everybody else. But it's a part of trading. It is what it is at the end of the day. And yeah, let's get started. Bitcoin, if you watched last night's stream, I was talking about this descending triangle. I was saying it looked kind of weak. I said I think it's going to break down. Honestly, I didn't even think it would break down like the next day, but it did. So boom, that level was given up. That was your final support really, at least short term. You broke that 17.5K level, immediately flushed down to around 15.5K. Another horrible day for Bitcoin. Right now you're in the middle of nowhere. you're right in between two big levels. Your resistance to the upside is this low from June, around 17.5K, and your next support, if we go back in time, is this high from the summer of 2019, just under 14K. You are right in between both of them. So not much to be said right now short term. It's kind of in the middle of nowhere. If we head over to the weekly, there is something that I do want to point out though. Over here on the weekly, you can see this this 14K level. It's pretty much this top. I'll delete these arrows. Here is a little bit of a different argument. First of all, you did break out of this wedge. If there's anywhere where you would be back testing on the weekly, it would be over here. And then there is also this, the bullish cipher that I've been showing on stream for a long time, that failed. You breached the 786 retrace from the COVID crash low to all-time highs. However, for those of you that are familiar with harmonics, what can you get after a cipher fails and you go deeper? A bullish shark. So let me redraw that. Just like this. Very perfect 618 retrace, golden retrace from X to B. A little bit shy on that C point. But if we extend this down and let's say we drop to around that 14K level I'm talking about, we continue to walk down this white trend line, this supply line. On the way down, you know, we continue to back test, even though typically you shouldn't even be back testing for that long. But down around that 14K, maybe even a little bit under, is when you get into that bullish shark territory. So that's kind of the next thing I'll be watching. However, we are not there yet. We're still in the middle of nowhere. This is not anything yet. It's not even real yet. But that's going to be the next potential pattern I'll be looking for if this decline continues to take place after the breakdown we saw in the last couple of days. So that's really my next, that's just the next thing I'm anticipating kind of for Bitcoin. It might not happen. If we go down to really low time frames now, look at the 4 hour, you are pretty oversold. But there's nothing here. It's just, for right now, it's a falling knife. There's not a lot of any patterns that have developed yet. You could go ahead and draw your supply lines. Maybe some of them will react, maybe some won't. You got a little bit of 1 hour classic bullish divergence. When we go to the higher time frames, which are more important, there just is not enough data yet for any technical argument, in my opinion. It's currently short-term a gamble. That's really what it is. Long-term, it comes down to how do you feel about Bitcoin at 16K? That's up to you. And that's really it for Bitcoin. Moving on to Ethereum. It gave up this critical zone of support around 1200, broke under that, and now your next support is around 1000. You can see these two lows from June. That's kind of your next level, and your resistance is that level that you just broke. That was your support around 1200. So just like Bitcoin in its own respect, Ethereum is also in between two levels. Short term, just kind of a gamble. It's a falling knife for right now, and that's really it. Moving on to other markets, this is interesting. The US 10-year, we've been talking about how it's been using this red line as like a magnet. When it was above it, it was holding it as like the low of day nonstop, then it broke below it and it's been holding it as the high of day nonstop. But you did get your first kind of large rejection off of that trend line, and you also printed that bearish engulfing candle we talked about, and now you're getting some follow through. That is also potentially your first lower high. If this high holds at 4.2%, potentially your first lower high for the US 10-year, and then at that point, probably create like a little bit of a new pattern, something like this. You almost have 5 touches. So that's really what I'm looking at there. I feel like it's rejecting, but I have said that before over here, and it did sell off for a little bit, then just went right back up. So it is tough. And then we have crude oil. I drew this demand line, I think last night on stream. We talked about the classic bearish divergence. As of right now, you're testing the $85 support level. You can see this low from October 31st. These couple of lows, even resistance over here, very key level. This low over here. So that is your key level horizontally, but you are kind of breaking down from this demand line, and you also have that confirmed classic bearish divergence. So moving on to metals, just a little bit of a quiet day for gold after the breakout yesterday, but still looking pretty much the same. And silver is showing a little bit of resistance at the 200-day moving average. Dollar currency index getting a small bounce off of 109. I feel like a radio show host the way I'm talking right now. I swear sometimes I talk like this and I just keep going so quick, and I just feel like I'm like a radio show host. It's weird, but The dollar currency index did bounce off of this, and you did get a bullish engulfing candle today, so short term, not bad. I drew out this support last night on the stream, I think, and you're bouncing right off of it for right now, but it's turning into a bear flag, we will see. And then next up, the Hang Seng Index, after getting a nice move off the breakout of this mini pattern, you made a golden retrace and you're pulling back right off of that. So nothing too crazy going on in other markets. I would say that the main thing that stands out to me is not crude oil, the US 10-year rejecting a little bit. And before we go into the overall stock market, the VIX, this yellow line is really nothing technical. It's just this rounding bottom I drew, but it's kind of just bouncing there. The VIX now has 2 green candles in a row after a very long streak of red candles, and it's just below that 200 and moving average. This is something I've been talking about a little bit lately, where we look at over here, we look at over here, over here. It doesn't typically perfectly bounce off the 200 moving average. It goes a little bit below it and then it kind of shoots back up. So if that does happen again, it kind of happened over here as well. We will see what happens there. But if we go down to lower time frames, I think Zeke was talking about this. You are getting a little bit of a breakout right now of a downsloping channel. So that is taking place. I don't think it didn't get deep enough for the bullish bat. It kind of looks like maybe a 786. Not even, it's like a 70% retrace. So not low enough for that. But what you did do, you want to talk about Fibonacci, if we go from this swing low to this swing high, you did pretty much hit your 1618 Fibonacci extension and bounce there. That's a little bit interesting. So the VIX is starting to curl up. We did see this red day in the market today. Let's start off with the SPY, and yeah, pretty rough rejection. If you look at the high of the day today, it was 381. If you watched last night's stream, I talked about 2 levels. The lower level short term being this green area, and you did break that today, and you could see you were consolidating at it for a little bit, trying to hold it. You broke that, and then you sold off another 1%. So it's just kind of like a reverse autopilot day, kind of the opposite as the last 2 days. And this somewhat bearish bat, it didn't really fully complete, but it kind of has played out. And at this point, I'll be switching that to a potential bullish bat. So you can see over here, if we do drop a little bit further down to this lower 370 area, which does line up with support, you can see this whole entire yellow zone over here, a lot of highs and lows at this area. If we drop down to the lower 370s, then you have a bullish bat. So literally it's like a bearish bat turned into a bullish bat. Pretty cool, I guess. And I already had charted this bearish bat before you actually got up here. I probably charted this out like when the SPY was over here, and I'm doing the same thing now but on the opposite side. It's not complete yet, but I do have it charted out, and we will see if that completes. If you drop another almost 1% tomorrow, futures are slightly green right now, however. And that's really like your short term for the market. You can maybe even draw out a wedge to look at tomorrow, something like this, kind of getting towards the end of it, which is interesting. And let's go up time frame by time frame. On the 1 hour, this is that same support zone I was talking about. You're falling back into it. Over to the 4 hour, this cup and handle, there's still the potential for it as long as you can hold 371. So the point that I made yesterday is still the same. Breaking above this is your bullish breakout of the cup and handle. Breaking below this is your failure of the cup and handle and a new swing low and bearish. So again, I'm still overall, like I said last night, still kind of overall hands off until we either break above this and I'll be more bullish, or break below this and I'll be more bearish. You're just getting a little bit of choppiness in between those 2 key levels I'm looking at. The hidden bullish divergence still has potential. And then if we go over to the daily, this is where things look a little bit different. Somebody did mention this in the premium chat today. But here we go again. Here we go again. We've seen this before. Seen this before multiple times. Most of the time, at least in the past year, it's pretty much ended the same way. And this is like a massive bear flag. So you're currently testing a breakdown of this bear flag on the S&P 500. So you have that potential cup and handle. Now these lines are all mixed up. Let me move this over. You have this potential cup and handle, but at the same time, you're testing a breakdown of the bear flag, which would pretty much be this trend line. So very key short-term make or break area in terms of patterns. You're not at a huge level right now. I already talked about those huge levels, the upper one being here, the lower one being here. But in terms of patterns, you're pretty much trying to develop a bullish pattern, but testing a breakdown of a bearish pattern at the same time. So that's really where this S&P 500 is right now. Moving over to the Qs, down 2% today as well. I drew this out last night on stream. The potential for the dragon is still there as long as you hold really above the upper 250s. And if you were to look at this as a bear flag, it would have already kind of broken down like over here. So it's a little bit different than the S&P 500. So it's really just, can the Qs continue to hold above that? Nothing else really has changed despite the 2% pullback today. Russell 2000 down 3% today. 173.5 is a little bit of a support, but you did fall under this 177.3 level. So you're back under that. The ARK ETF. This is a big one. This is a big one. The ARK ETF is testing a breakdown. Lowest close of the year, lowest close since probably like 2017. So today was the lowest close for mid-cap growth stocks, the ARK ETF overall in 5 years. And your lowest prices in general in 5 years. So it's going to take some more time to really confirm like a breakdown here, but this is it. I've been talking about this for a while now. This is it. It doesn't look great. So I don't know. Do we see the ARK ETF drop another 32% here, right down to the next support on the weekly, which was prices from earlier in 2017? I don't know, but this is your last level, and there's really nothing else to say about that. It is crazy. At this point, I would probably extend this wedge out, just create a new wedge, which is kind of what sucks about making wedges in bear markets. You can just keep extending them. Even if they do break out and play out a little bit, you can just still create another wedge out of it, which is weird, but it is what it is. So we'll see. Maybe potential classic bullish divergence and an almost oversold RSI helps you out a little bit, but right now you are testing that breakdown. And I just wanted to mention that. And now moving on to individual names. Fisker down 10% today. Unfortunately, you're still slightly above all-time lows. Again, if that breaches, the stop of the swing will be there. So this is it. This is your big support level. I was very honest about this. I talked about how we rejected $8 a few days ago on the stream. I talked about that potential inverse head and shoulders kind of like barely hanging on. And believe it or not, you had a wedge and you broke down from it. So you're testing your last horizontal support level on Fisker. If we go over to the weekly, you're still in this very big wedge. And I would even make the argument that the chance of Wyckoff accumulation is still possible, but only if like you really like held these all-time lows area, bounced right off of it, and had a good next couple of weeks, which is possible. It's just a little bit harder to hope for things in general when you're down 10% on one day and you really just have one little last level that you're hoping for. But if we go down to the 1 hour, see, you're like right at it, and you did fill this gap. You had a gap up on October 17th. You did fill that gap today. So you did get that, even though that gap's really not visible in any higher time frames than the 1 hour. But it was close. It just didn't really get the confirmation above 8. It was really all about this. I said it very clearly. You needed to hold this, and you just were not able to. So now you've kind of gone back from that level down to your next level, which was pretty much right here. And that's where you're testing right now. CLOV, that swing stopped out a couple days ago. It is going lower right now. Not much to say. It's just a falling knife right now. Like very similar to Bitcoin, how I said earlier, you just need more data. You just do. And you could draw all the patterns you want, but there's nothing really on major time frames in my opinion. Oversold, sure. That's really it. Like again, this is just, it's very, very tough to stream in times like these because either it's like a 50-50 like the overall market and you have like a bullish and a bearish pattern kind of intertwining, or it's just a falling knife and there's not much to say. And then on top of that, the sentiment is just so not great. I'm gonna use that word instead of another word. And that's where we're at. It's just being patient in these times, like understanding things can get worse, but they will get better at some point. And it's just hanging on until then, really. So yeah, like, you know, we talk about these names every night. They're selling off, but so are most other stocks right now. AMC down 8% today after those earnings yesterday, falling a little bit under that 530 level, but you are in this very big support zone for AMC currently. Nice little bounce at the low of the day. Disney also, we talked about this earnings last night, and I talked about that $91 support level. I'm not trying to laugh, but like, you opened right at it, you broke it, and then you just kind of dumped. So down 13% today for Disney, almost at COVID crash lows. And I saw somebody shared in the Discord. Let me see if I can find it. Oh, this one right over here, Anna. I mean, we're seeing this kind of across the board. We're somewhere in these areas, maybe. I don't know, maybe some people argue we're over here. But if we're talking about this being the COVID crash low, then a lot of stocks actually are around over here. You're pretty much going back to your lows from like your last bear. It wasn't really a bear market, but mini bear cycle or mini crash, whatever. So I feel, I don't know what all of you feel. I don't feel like it's like any depression at this point. Anger, I don't feel angry. Capitulation, like, first of all, I don't really feel any of these emotions in general, but if I were to just put myself in like the perspective of a lot of traders right now, like maybe like panic, I don't know, somewhere around there. I don't even like to use this chart that much, but it's just a lot of charts literally look like this right now. Guy in the chat's voting for anxiety or denial. See, and it's different. You know, I feel like some stocks are like around over here, maybe even some large caps. I think maybe some small caps are around over here. But there's obviously a lot more to just this when it comes to charting. So let's see. The guy says, yeah, drop your votes in the chat. It's a good idea. The guy says anxiety, which is around over here. Dave Jazz says annoyed, which is just your feeling. Numb, but not on the chart. Okay, Darwin, kind of the same thing. Ali Frankie saying, Smile Direct Club looking bad even after beating earnings first time in over a year. So many stocks doing well on earnings reports, but it just doesn't matter, which is what gives me a little bit of anger. I'm not going to lie. Zeke saying denial. I'm more around like in between denial / panic. Not that I'm literally feeling those emotions, but if we're just going to be talking about this chart. And then Frank's saying panic. But yeah, around this area is kind of how I would feel if we're going to be relating this to anything, really. And then Guy has saying, I haven't heard of anyone pulling out their retirement, so we can't be in panic yet. I have a few people. But I do also feel that as well. It doesn't feel like everybody's like running to get their money out of the market. Because I also feel like I know a lot of people that are like aggressively buying all of this. So I feel like there's a little bit of everything, which is why I kind of stick towards this point. Like maybe people are like, should I sell? Should I not? You know, but that's how just a lot of stocks look. Going back to this chart, like doesn't look that different than that. Yeah. Blood in the streets. Tesla was down 7% today. We talked about this breakdown last night. If you go over to the weekly again, I drew out this zone and you're now breaking it. Like I'm drawing these zones out thinking maybe they'll break in like a week or two. They're literally doing it the next day. I did the same exact thing on Bitcoin when I drew out this support. I'm like, maybe I think it'll break, but maybe in a week or two. Nope, literally the next day, boom, flushes right under it. It's like, this is a very like quick time for a lot of these sell-offs. And I'm honestly surprised that the SPY is still kind of up over here. That is a little bit interesting to me. But you can see a lot of the names that represent the S&P 500, they're not making higher lows right now. They are already at much lower lows. A lot of large caps in general, like we look at Microsoft, that already put in a lower low. We look at a lot of different ones. However, if we look at Apple, this is also a big one that I want to talk about. Also testing this lower part of this huge inflection zone. This could be something that really does affect the market. So I'm keeping an eye on this. You're barely hanging on to the lows from the last few weeks. Something to note, Coinbase is getting crushed as well, down 10% today. Hanging on to these lows from June. We're really just kind of like speed running through a lot of charts right now. Amazon, I'm sorry for whoever's doing timestamps tonight, it's probably going to suck. But Amazon dropping down closer to that $83 level, which if we go over to the weekly is like last major support for a while. After that, it's down towards like $68. So I literally talked about this again like a few days ago when you were breaking this level. I didn't think we'd already drop down to the bottom of the zone right away. I thought we would get a little bit of consolidation maybe a retest, and then go there. Literally straight down, falling knives, blood in the streets, whatever terminology you want to use. And it's just weird to me because it's like we had days where the SPY and the Qs were down like what, 4 or 5%. And it didn't even feel like individual stocks were selling off this much. Now we're seeing a lot of individual names getting crushed day after day. And the market's like not even doing super horrible in terms of like some of the main ETFs. So it just is a little bit interesting how a lot of these things like they make sense if you really look into the weightings and stuff, they do make sense. But at the same time, I wish there was like a more standard, like everything view on certain things, but also at the same time, not everything. Maybe some of you understand what I just said. I'm basically trying to get at the point that like, I wish there was an easier way to tell exactly how things are doing overall, but at the same time, I don't want to see literally everything at the same time because then it gets overcrowded. So I don't know if that was just like a random thought, to be honest. But Lucid was also down 17% today. It's now pretty much returned to where it was when it was a SPAC and everything, or even before. Pretty much all-time lows as an actual stock. It very roughly rejected the top of this channel, had earnings, sold off. So it's across the board. That's really what we're seeing right now. It is what it is. There's not much else to say. I just wanted to go live to talk about these things. Maybe it made somebody's day a little bit better. Hopefully it did. And yeah, if there's any take requests, feel free to drop them in the chat. Make sure to hit the like button, hit the subscribe button. And this will be the last stream of the week. But I'll be in the Discord. Make sure to join that. The link's in the description. I think I literally just said that. It's been a long day. So, XLE, wow, this is interesting. It was so close, so close. I was talking about this last night, testing the breakout of pretty much the biggest level, the highs from over here, the top of that rising wedge, this high from 2008. And for right now, you are rejecting. If you go a little bit lower, you get a tweezer top on the weekly if you close a little bit lower tomorrow. And this is also, again, the type 2 of this massive bearish bat. It's not perfect. It's a little bit extended, but you did break down, confirmed breakdown, and nearly confirmed classic bearish divergence. So very, very, very close to confirming this. I mean, kind of already is confirmed, but you need a little bit of fall through price action. There's a little bit of support here as well. A very quick change. It looked like it was almost about to invalidate all this bearish stuff yesterday by very quietly sneaking above that resistance, and then today is like boom, right back down to what the technicals were already indicating. And then XOM, Darwin saying vibes, it's good to see you as well. NVIDIA, all right, so XOM, just kind of like a blow off the top candle. I'd say this is pretty much breaking down right now, and next support's towards $100, really anywhere in here. All of that could be support. That's really it. MACD flipped over to green. Did have a little bit of classic bearish divergence on the RSI as well. NVIDIA, this pretty much at the first target of the premium swing, now just pulling back a little bit. This is where things change a bit because now you're developing hidden bearish divergence, and you probably draw out a little bit of a bear flag here as well, but it's not testing a breakdown just yet. And even if it did, if it could still hold above 126, that could be okay because it could just be more of a back test at that point, but we'll see. All right, and then Palantir, just clear all this. Those are kind of like the three bigger levels. Looks like a bear flag playing out right now. There is this bullish shark pattern completion zone. I don't know, so if you do curl a little bit over here with that, then if you can get back above 715, that's not horrible. but there's not much of any pattern. It's just like a potential harmonic, or it's kind of already at the pattern completion zone. It's not really a potential. There is a harmonic here. It's just, will it play out or not? I don't know. If you're just looking at price action, it's still kind of like a lot of other charts. It's a falling knife right now. PayPal. I did type it in. So I think it's already on my watch list, so that's why I think drop it into the bottom. PayPal. It's in a descending broadening wedge. You're still above this whole entire support area. So not the end of the world by any means. Maybe even this could be looked at as a bullish bat. That, and then you got a hammer candle off the pattern completion zone. So it's already kind of played out a bit, pretty much up to your B point. You already got your type 1 move right over there. So that's really, you just see right now, you just want to stay above this blue zone. Smile Direct Club, this is, I'm just going to delete this, all this, I'm going to be honest. I don't know, you could chart it like this probably. Draw a demand line over there. If you want to really have fun, you could draw a supply line like this, but I would not. No fun today. We're just going to draw a down sloping channel like that. And then major level is just around $1, honestly. This is the first stock I ever bought. Thankfully, not that I put that much money in it. Thankfully, I sold it probably like somewhere over here. But I still always want to see this do well. I don't want to tell my kids the first stock I ever bought went from $8 to a penny stock, but it did. So can't take that one back, can I? Yeah, that's literally it. You're just bleeding in a down sloping channel. You're not breaking out of it. You are close to oversold. Potential classic bullish divergence. A lot of charts are similar. Like they're just going straight down. Your oscillators are starting to show, not showing to start. They are starting to show a little bit of seller exhaustion, if I'm being honest. But even when you get stuff like that, it can only lead to dead cat bounces as well. I think that's very similar to the Hang Seng Index, right? You got the classic bullish divergence. You were oversold. You broke out, you had a nice little quick move up, and now you're already starting to head back down a bit. So it's just the classic things you see during bear markets and bear trends. Like at some point, yeah, your oscillators do flip back to bullish for a little bit, you get your quick bounce, but then if you don't really get much of a strong pattern or volume developed off of that bounce, you can just sell off again, do the same thing. Just a constant cycle. We'll see. Not gonna answer that chat, Darwin. And then I see a couple of ones. HTC support a big wedge, big gap if breakdown. Alright. That's the wrong one. CEI. I think it really was over. Not over. I mean, technically at this point, yes. In hindsight, it was over when it broke under this like massive blue support zone. So now it's just in a new phase and a new cycle. That's a pretty nice supply line right over there. And then maybe look at it like this. Let's look at it like this, however you want to, but it's still under the supply line. It just actually very recently rejected it. You could even actually drop this a little bit more like that. Then you kind of have like 1, 2. This one's a very quiet 1, 2, 3, 4 touches right over there. UWMC, this is interesting. I'm not sure. It must have been actually, it's probably earnings, but you could see it created this dragon pattern. It's interesting to see there are stocks that can still do stuff like this in this market environment. But look, it created this little dragon pattern. It looks like earnings went well. It actually broke out before the earnings, and it played out beautifully. At this point, though, it's kind of back in this range that it was in, and it's right in the middle of it, testing the 200-day moving average. So there's not much of any technical argument right over here. I think it was mainly over here, but also earnings would have made it a little bit tougher to trust the technicals going into the earnings. But yeah, I think just a nice little combination of a pre-earnings breakout, and then however earnings went, it was reacted to pretty well by shareholders. HTC 1579 to like 1437 is your support zone, like that. And it kind of looks just like a massive descending triangle. I'm not going to lie, but it could break up. It's not even testing a breakdown right now, but that's just kind of what this looks like to me. You do have some confirmed hidden bearish divergence. Maxime says, just from what I've been reading, when energy starts dumping, it's the beginning of the end. it was like the outperforming sector, and now we are starting to see like a very quick technical shift. These are bearish variables. As long as you stay under 93, I'm flipping back to bearish on energy overall. Not every single energy stock, but just a sector. That's a massive breakdown with massive classic bearish divergence at the biggest level on the chart. And what's up, Ollie, in the chat? TradingView having that November sale this year. I would assume so. I don't know for sure, but they typically do like a Black Friday sale. I don't even know when my subscription ends, but hopefully they do. I'm pretty sure it ends like the middle of next year or something. Also, I don't know why there's such a delay with like the actual chat and why it's taking so long to show up on the stream, but yeah, thank you all for watching the stream. Hopefully you enjoyed it. Hit the like button, subscribe button, check out the links in the Discord. Yeah, it's a very crazy time, and just learn as much as you can. That's pretty much how I'm going to put it. So thank you for watching the stream. I really, really appreciate all of you. Again, this is the hardest time for most people to even be looking at the market. So just the fact that you're trying to learn in this environment is going to craft you into a monster in a good way as a trader. So thank you for watching the stream. Have a great night and peace out.